Mr. Mohit Gang, co-founder and CEO and Moneyfront. Good morning, Mohit. Thank you for joining us here on News 9. Now, I want to begin by asking about the potential inclusion of Indian government bonds in the Bloomberg Emerging Market Index. I have two questions here. What do you think, what kind of inflows are you expecting from this inclusion? And what will it mean for Indian equities?
Hi, morning Suyash. Always a pleasure to be with you. Look, so I think this was writing on the wall. Last year when JP Morgan kind of included India's bond in their global index, I think a review was due by Bloomberg also. And in fact, few other larger agencies of the world should also follow suit in some time. And I think it's India's reckoning movement. Basically, I think JP inclusion happens effective June, and that should lead us to a very huge inflow of almost 20 to 30 billion over next 1 or 2 years. The Bloomberg index inclusion might not lead to massive inflows. My sense is for the initial first couple of months, it should be in the range of around 2 to 3 billions, leading up to 5 billion by around September. However, it's not always about the inflows, it's also about the symbolism of this entire inclusion. And I think the global peers accepting India's bond in their indices leads to a very big signal to the global investors. You will see a lot of inflows coming in. Consequently, that should lead to yields easing off in the country. Currently, the 10-year, if you see, is hovering around in that range of around 7.2 to 7.25. Yield should dramatically ease off post June because A, there is no incremental risk of further rate increases, as we all know and we have been discussing on this show. And B, because of these bond inclusions, we will see a huge inflow coming in, and that should yield off some pressure on the yields. Now, that consequently should reduce the cost of capital and cost of borrowing dramatically in the country, which in turn, to answer your question, Suyash, should benefit the corporate Indian, the corporate corporates also to a large extent, because I think corporates are massively deleveraged on a whole as we speak today, and the corporate capex cycle is long overdue now. So yields easing off, the borrowing costs coming down will ease off pressure on the working capitals, will improve the payment cycles for the corporates and will improve the overall environment on the borrowing front. So my sense is corporates will find it easy to borrow, and that should give a good pickup on their bottom line numbers and should give a good robust what do you say capex formation ability to the corporates on the whole, right? So my sense is this is a very positive signal, very positive move. The repercussions is it will trickle down to the entire economy, and in next 6 months or which is from June to September period, I think we should see the benefits of this coming down.
All right. And moving on, Bajaj Auto has announced its 4,000 crore buyback at a price of rupees 10,000 per share. Now, this gives us an upside, at least potential upside of 30%, because the stock has also jumped, in the early morning trade. It's up somewhere around 3% or so. But, given the size of the issue, I think retail participants won't be able to benefit much, because I think the acceptance ratio works out at somewhere around 10%, isn't it?
Look, so acceptance ratio might not be great. Honestly, I think it's a 4,000 crore rupee kind of a buyback. And I think Bajaj Auto has made it very clear long back also that as and when they touch around 20,000 crore rupees in cash on the balance sheet, they will try and pay back one third of it to the shareholders in some
Right.
form or manner. Right? So along with dividends and with this buyback, I think they should reduce the overall cash on the balance sheet to roughly around 15,000 odd crores. Even the promoters are participating in this buyback, which is a very healthy sign. Right, and I think promoter holding should inch up by around 0.7 odd percent after the overall buyback, basically. So the retail investors might not make a lot of money, but whatever you can tender in, whatever gets accepted, I think that will make some amount of money. 30% immediate gain is a fairly decent gain to go for, and that's I think one of the reasons why the stock has run up in last 6 odd months is anticipating this buyback, right? So, but even if you don't find an opportunity in the buyback for retail investors, it's a good long-term hold. The way the company has been generating regular cash, the way the dividend flows has been increasing, and the way company is very focused on returning back the extra cash on the balance sheet to investors, I think these are all very healthy and good signs for investors in the long term. So my sense is even if retail doesn't get too much of opportunity in the buyback, there's no harm continuing to hold the stocks for a fairly good upside in the long term.
Good morning, Mohit. Now, the festive season has come and gone, but the FMCG sector does not seem to have benefited any. Uh, Going by the Q3 results updates, across the board, the stocks fell yesterday, be it Dabur, Marico, Godrej. Report of flat sales and weak volumes growth in October to December quarter were the indicators of that. Volume recovery in India has been weak. Low raw material costs may support gross margins. But the rural demand, it seems, has failed to match up to the urban demand with the FMCG sector. Be it Godrej Consumer Products, Marico fell as much as 3.99%, recovered a little today. Dabur, Tata Consumer Products, ITC, across the board, they all fell. So is it really the rural demand, or is it the unorganized sector that is beating the big brands?
Thank you, Amit. So, look, I think yes, I kind of agree, and we have touched upon this in our previous shows also that in spite of the urban demand being whatever it is and the urban consumption going fairly strong, the rural demand hasn't picked up, and which is a cause of worry. Even if you see uh, 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 the agricultural sector growth, the breakup of agricultural sector growth in the overall GDP numbers, which were released recently, the agricultural sector has only grown by around 1.9%, which is a cause of worry, to be very honest. I think it was partially to do with uneven monsoons last year. And also, I think people were hoping that the overall marriage season and the festive season should lead to pickup of demand. The pickup, it doesn't look as if has been up to the expectations, but my sense is, and I remain fairly positive out here, I think market is also kind of weighing down on these stocks in anticipation and getting them at par in terms of valuations and everything. So my sense is this first quarter, because of leading up to elections, I think we should see a good pickup in the rural demand. Rural demand is always a trickle down impact of the urban demand, right? And just a case in point is the overall construction sector and the reality sector. The way it is doing, that overall impact of that sector is massive on the rural demand, because you find a lot of rural migrants and a lot of rural population finally leading up to that. So my sense is the rural demand should pick up in Q1 and Q2. However, FMCG stocks can continue to be under pressure for the first quarter or maybe perhaps first half of this year. And from there on, I think they should find a reasonable base, and some consolidation should happen from there on. But I would still stay away from this pack for some time to figure out what actually is happening on the ground. And perhaps leading up to the monsoons this year, will remain cautious on this entire pack.
All right. Moving on, the first initial public offering of 2024, Jyoti CNC Automation, has opened for subscription today. What's your take on that? Should one subscribe to the issue?
It's an interesting issue, Suyash. Look, so I think whatever is going on in the IPO markets is, it's honestly crazy and maddening, and it sounds very difficult and sounds very esoteric if I say that one has to be really cautious about this one. In terms of valuations, I think the valuations are a little too steep on this one. Plus, the overall financials of the company aren't looking in great shape for last 2 3 years. The company has been running some losses, but to put it positively for the company, it's the only listed company, or will be the only listed company in the CNC market in India, right? So it and they enjoy almost 10% market share. They've acquired a French subsidiary, I think last year, which hasn't been doing last year. No, sorry, I'm not sure when did they acquire the French subsidiary, but that subsidiary hasn't been doing that great, and which is kind of dragging down the overall results of the company, basically. But this space is very very niche. The computerized control systems for machines is a very niche area. It's kind of a monopoly area where the company is. The promoters have huge wealth of experience in this entire thing. So from a very long term perspective, which is 3 to 5 years, the stock looks fantastic, to be honest. And uh, uh, the use cases of these kind of machineries in various industries are massive, in auto industries and defense industries and manufacturing, of course, right? So the use cases are huge. and the potential is massive. I would just wait and watch to figure out how does the company kind of spruce up its financials, the balance sheet overall, the valuations kind of becoming reasonable either by virtue of time correction or by virtue of some value correction happening at a later stage. For investors looking at a quick listing gain, perhaps if the market remains buoyant, maybe this will give an opportunity. Maybe this will give an opportunity if the market remains in the mood in which it is and the market remains buoyant. But for long-term investors, yes, it could be a good buy if you have patience for 3 to 5 years, and this is a good space. I think the only company which comes close to it is Lakshmi Machine Works, which does some kind of work in this space. But otherwise, there's no comparative peer for the company.
All right, that's the view on Jyoti CNC. May not give stellar returns on listing, but can be a long-term bet. That's the view coming in from Mohit Gang. Sir, always a pleasure speaking to you. Thank you for joining us here on First Sec.
Thank you so much, Suyash. Thank you.